There's a narrative out there that I think that you think is wrong, and I just want you to have the opportunity to talk about it, which is that underneath this Robinhood issue is this idea of payment for order flow. That Robinhood is directing these trades to folks like you and to Citadel, and that the argument is, or the argument against this is, that customers are not getting the best price that they possibly could, and even worse, suggestions that firms like yours effectively are front-running those trades, right? That is the narrative out there. I want, given the conversation we had, for you to explain how it actually works in practice.
Sure. Great. And I really appreciate, thank you very much for having me on. I think the issue is, and you kind of set it up in the intro, is that people conflate two different concepts. There's this concept of wholesaling, which goes back 35 years. A bunch of really smart guys at the retail brokers that were the pioneers back then said there may be a better way to execute client orders rather than just sending them to what was then the only exchange, the New York Stock Exchange. And so they approached a bunch of market makers, predecessors to the Virtus and the Citadels, and said, if we send you these orders, right, which tend to be smaller and non-correlated with the marketplace, can you improve the price and can you give us better execution quality than our clients would ultimately get on an exchange, right? So that's the fundamental premise of wholesaling. We've got 200 retail brokers, platforms, wealth managers, et cetera, that every day are saying, look, we have an obligation of best execution, right? Do we send this order to remove liquidity to an exchange, to a dark pool, or to a wholesaler, the 5 or 6 of us that compete every day on our execution quality? So the key thing is that we are providing a price that is at or better than the national best bid or best offer. So better than you could get it on exchange. And every single broker, including Robinhood, is making those routing decisions with that in mind and only that in mind, not based on a rebate that we might otherwise be paying, Doug, which people call payment for order flow.
Doug, explain this though. So Robinhood uses payment for order flow. Fidelity doesn't, but they both use you. What's the difference?
Well, I think, look, the difference is that consumers have choice, right? I mean, there's a lot more to using one of those two platforms, and there's 200 odd different retail brokers, platforms, et cetera, that you can go to. The analogy I would use is, I get gas for my car. I live in Short Hills, New Jersey. There's 3 stations that are really competitive solely on price. And there's a station a little bit further away where I know it's a nickel a gallon more, but I like the guy there and I can walk into the store, get my paper, maybe buy a cup of coffee, that kind of thing. So ultimately, there's transparency around price, right? But there's other things. There's financing rates for margin loans. There's education. There's research. There's this and that. At the end of the day, investors make that informed choice. As long as there's transparency around it, Andrew, there's nothing wrong. But the key fundamental thing is that whether you're a Robinhood client or a Fidelity client, you're getting a price that is at or better than the national best bid or best offer, right? That's the thing. There's nothing nefarious going on here.
And just so I understand, though, if Robinhood were to send those trades to a lit exchange, you're telling me that they would get worse execution, they would get worse pricing?
Categorically, yes. And this is all public information, right? We produce every month what we call our price improvement statistics. It's all publicly available. In 2020, all of the wholesalers, Virtu, Citadel, Susquehanna, Two Sigma, great firms, we compete with each other every day. We provided $3.7 billion of aggregate price improvement to retail investors in this country. That's what's so frustrating, which is the deal that retail investors have today because of innovation and competition means that a retail investor can go on one of these little things, right, and for $0 get a price that is on the screen or better than what's on the screen, right, and get that done instantaneously, right? We should be celebrating the efficiency and competition in the market.
Doug, and you can tell me that I'm wrong. The narrative that's been created here is that this is a Facebook situation, that the customer is not, that the Robinhood's customer is not actually the end user. Robinhood's customer is you because you're the one paying them.
No, it's actually the opposite of Facebook. There's zero client information. I've seen that narrative out there, and you mentioned it the other day on TV, which is why I had my little tweet storm with you, right? Which is there's no client information. All of these orders, we get millions of them per day. They're small little orders, and they're 100% anonymous, right? So there's no storing of data. There's no Facebook situation. Actually, the market maker has no information. Orders are just coming at us, and we have to execute them. You mentioned GameStop yesterday. When there's a barrage of orders like that, and where people are selling, guess what? We're buying. Right. I looked down at my GUI yesterday. I looked up and we had lost millions of dollars, right? Because all of a sudden the market tears against us. That's the conundrum of the market maker. The information asymmetry is actually the reverse of what you're suggesting, right? And there is value to us, uniquely to the Virtus and the Citadels as the market maker in trying to capture the bid offer spread, right? You as the retail investor, you mentioned your grandmother the other day when you were interviewing Ken Griffin. It was a great interview. And the point was you were saying, well, it's not really fair because your grandmother's competing against Citadel. She's not, right? She's buying stock for your kids because she's thinking over the next 5 years they're going to appreciate. The tiny little difference between what a willing buyer and a willing seller is willing to pay, which is called the bid offer spread, that's what Virtu and Citadel have spent hundreds of millions of dollars and decades perfecting that system so that we think we can profit from that. And effectively what we're doing is we're sharing some of that profit back to the end user in the form of price improvement. And yes, in a number of cases, there are a number of retail brokers that take a rebate. So we're effectively, the market maker is profit sharing back to the retail broker. The retail investor is really ultimately benefiting this.
Shepard Smith here. Thanks for watching CNBC on YouTube.